CNBC reports Walmart CFO says price hikes from tariffs could start later this month. In an interview with CNBC, Chief Financial Officer John David Rainey said tariffs are still too high, even with the recently announced agreement to lower duties on imports from China. Walmart CFO John David Rainey actually mentioned Walmart is wired for everyday low prices, but the magnitude of these increases is more than any retailer can absorb. It's more than any supplier can absorb, and so I'm concerned that consumer is going to start seeing higher prices. He mentioned that these would likely be towards the tail end of this month and then certainly much more in June. CEO Doug McMillon has said that tariffs on China in particular create the greatest cost pressure. Imports from the country, referring to China, account for a high volume in categories such as toys and electronics, and that Walmart is focused on keeping food prices low, but has said that tariffs on countries like Costa Rica, Peru and Colombia have put pressure on prices for bananas, avocados and coffee, which mean your avocado and toast and morning coffee might soon carry a bigger price tag. Walmart plans to play offense by keeping its price gaps below competitors and said the company will absorb some of the higher prices from tariffs and expects suppliers to do so too. And so on one hand, this can be seen as good news for consumers. You know, Walmart have kind of leveraged their strategic weapon, if you like, because they have so much buying power. They've kind of actually mentioned that they are prepared to absorb the cost in some places for certain products after Trump's announcement of the tariffs. But smaller retailers who can't absorb those costs and risk losing customers to bigger companies like Walmart, and at worst lose their business too. Some smaller businesses are already being affected by the uncertainty surrounding price increases and tariffs. Begbie's Trainer Group, who are a leading business recovery, financial advisory and property services consultancy, have reported a sharp increase in UK businesses in critical financial distress. The findings underscore the severe challenges businesses are facing due to rising costs, weakening consumer confidence and aggressive tax recovery efforts by HMRC. With Reuters also reporting that US small business sentiment declines further in April. It goes on to say US small business confidence fell for a fourth straight month in April, with the share of owners reporting job openings declining to the lowest level in more than 4 years, potentially hinting at a significant labour market slowdown. CNN reports that Americans pulled back significantly on spending as higher tariffs took effect in April. Spending at US retailers slowed sharply in April after a surge in March as shoppers rushed to beat President Donald Trump's stiff tariffs. And so consumers were rushing to buy expensive items like cars in March before new tariffs came into play. And so effectively March was a rush to buy and April was pretty much a cool down period, and this is a clear indication of the change in consumer behaviour based on the impact and announcement of these Trump tariffs. Reuters reports that the S&P 500 recovered to almost its all-time highs, stating that market momentum following the US-China trade truce has put stocks back in the sight of record highs, but there is nonetheless wariness about the economic fallout from remaining tariffs, which could slow gains in the near term. You can see here they report the S&P 500 soaring 18% since April the 8th, and so the S&P 500 has effectively rebounded following this 90-day pause to pursue trade agreements. The New York Post reports JP Morgan Chase CEO Jamie Dimon warns recession is still possible. He stated, "Hopefully we'll avoid it, but I wouldn't take it off the table at this point." And so it's critical to note that this isn't 100% certainty. You know, Jamie Dimon has stated here, "Hopefully we'll avoid it." While Dimon emphasized resilience, billionaire investor and Mets owner Steve Cohen offered a slightly more cautious outlook, estimating the chance of a recession at around 45%. "We aren't in a recession yet," he stated, "but we have significant slowing growth." And so even as the S&P 500 edges toward record highs, we see clear indications of pressure building behind the scenes. Consumer spending is slowing, price hikes are looming, and top CEOs like JP Morgan Chase's Jamie Dimon aren't ruling out a recession. AP News has actually reported that inflation cooled again, even as some tariffs took effect, but economists don't actually really expect this to last. Despite a slight cooling in April, prices for essentials like food and rent still remain high. Grocery prices dipped 0.4% from March to April in what will come as a relief to many people stretching family budgets for the basics. Overall, the report suggests tariffs haven't yet impacted prices for many items. Economists say the impact will more likely be seen in June or July, and the 10% tariff on all goods that took place in April 5th could take 2 to 3 months to feed into inflation data as well. On top of that, many companies built stockpiles of products earlier this year, enabling them to delay price hikes in hopes that the trade war will cool. And so with this information in mind, it may take a few months before any data does actually indicate the difficulties that consumers will face with an increase in food prices, in prices for products off the back of the implementation of these new tariffs. And as much as the S&P 500 indicates that there is a recovery on the cards, it's important to notice that there is this lag, and we may not see any of the real data come for these 2 to 3 months, as I mentioned. We've already seen how fragile markets can be with the sharp sell-off that we witnessed in the S&P 500, literally on the announcement of Trump's Liberation Day tariffs, only for stocks to rebound when talks of a trade truce surfaced. But looking ahead, the real test will come in the next few months when the tariffs actually hit prices, and also how businesses react to that. How much are they going to pass on the costs that they incur through these tariffs onto consumers? Walmart have already alluded that they can manage that somewhat simply because of their financial prowess, but other businesses may not have that capacity. We have CEOs like JP Morgan Chase's Jamie Dimon and renowned investor Ray Dalio signaling warning signs or alerts that there is a recession imminent and that the economy is incredibly fragile. But it's very important not to get distracted by a lot of the mainstream media and all the hype or the fear mongering, and really see any kind of recession as an investment opportunity. Cost averaging into companies or investing aggressively during these kinds of periods that you can see on this chart right here can pay off significantly, and it's actually an opportunity to acquire really good quality companies with strong brands and strong products or services at discounted prices. In doing so, you position yourself to capitalize on substantial growth when the economy recovers and share prices go up automatically as well. And with that in mind, it's really important to understand that the market operates in cycles. These are cyclical patterns that happen periodically over time. And so knowing that in mind and investing in times of volatility or in times when there is pessimism in the market, when you can buy these stocks at a discount, and just holding on to these great companies that you've acquired over a longer period of time, 5 years and 10 years, so that you can run them back up to a time of optimism where the price will be significantly higher than you bought them for. But look, thanks very much for watching. Have a great day, and I will see you in the next one. Take care.